Oil prices surged sharply above $110 per barrel, extending an explosive rally driven by escalating conflict in the Middle East. Brent crude jumped roughly 17%, while US WTI crude climbed about 19% after massive gains the previous week. The spike in crude is sending shockwaves across financial markets as investors brace for higher inflation and rising living costs. Energy markets remain on edge as tanker traffic through the Strait of Hormuz remains severely disrupted, a critical choke point. Political developments in Iran have heightened geopolitical uncertainty. Mujtaba Khamenei is positioned to succeed Supreme Leader Ali Khamenei, signaling hardline leadership will likely continue during the ongoing conflict involving the United States and Israel. With no immediate signs of de-escalation, markets are preparing for a prolonged period of elevated energy prices. Oil supply risks tied to the Middle East are significant given the region's critical role in global oil and gas distribution. Economists warn that sustained high oil prices could slow global economic growth while accelerating inflation, placing additional pressure on central banks already balancing fragile economic conditions. Financial markets reacted swiftly. Wall Street futures declined sharply, with S&P 500 and Nasdaq futures dropping, reflecting investor concerns that rising energy costs could weigh heavily on corporate earnings and economic growth.
Investors are seeking liquidity and safety in the US dollar, reinforcing its status as the world's primary reserve currency. Meanwhile, the euro weakened as markets reassessed economic risks tied to the energy shock. The combination of surging oil prices, geopolitical tensions, and inflation concerns is creating a volatile environment across global markets, with energy prices now a key driver of macro sentiment and risk appetite.